Hello lovely people, it is Tuesday the 15th of July and we've had a pretty wild start to this week. Last week we said if we broke higher, the target for Bitcoin was 120,000 and we saw massive inflows at the end of last week. On Thursday I think it was the second highest ever day for Bitcoin inflows, and we saw a huge breakout of the sideways range that we've been in. Not for that long, but nonetheless it looked like a trend higher. And last night I said to my group, I said, it's really important that we kind of hold this 120,000 level, because I really don't like weeks that start with a big move in Asian trading before kind of US trading begins. They quite often get faded. So if we look at the this was last Thursday, 1.179 billion. The highest ever before that was back in October 2024. And when we look at the Bitcoin chart, those weeks are pretty important, because in October 2024, this was here when we were breaking out of this bullish flag sideways range that we'd really been in since March, 6 months. And that kept going. And so very similarly, we've broken above, we had 6 weeks for sideways, broken out of this sideways range and broken above the January highs for Bitcoin. So this is a very similar scenario where we kind of need follow through and we need this to keep going, because if we don't, then if you think that this last week therefore is where everybody bought, where we broke back to new highs, so losing this level means all of those billions of ETF purchases will be offside, and we could see some weakness and a bigger pullback if we don't start holding these levels. So let's do a deeper dive on Bitcoin. First off, I was a little bit worried about these highs, because it is possible from the low that we made in December to count 5 waves up from here. 1, 2, 3, 4, 5, and this was kind of a retest of the highs. And so it's possible that this is still a kind of sideways correction B-leg. Quite often, we always think of a 3-wave, sorry, I'm drawing this really badly. We always think of 3-wave corrections are either sideways like this, or we kind of do very nice 3-wave corrections like that to a measured level and we carry on, or sometimes they don't look like this. We'll make a slightly higher high and then the correction will be over, and that's possibly what we're doing here. And one of the things that will tell us in Bitcoin if it's just a correction is if this swing from the April low ends up just being a kind of ABC measured move. So when I measure a correction like this, so it could be that this is our first swing, second swing, and we're doing a correction like this and we carry on. So one of the things that will tell us if this is a 3-wave correction, it will either be an equal measured move, these two swings are equal, but sometimes this swing here will be shorter, so it will just be 61.8 of that first swing, so it'll look like this. Or sometimes it'll be 1.618, it'll be longer, less so. Normally it's kind of either 61.8 of the first swing or an equal measured move. So if I draw this from this low, you can see that 61.8, where this swing is 61.8 of the first swing, is here at 121,520. So that kind of, for me, becomes an important level where we need to go beyond. We need to get up to this equal measured move level, which would make it more likely that we're in a new lovely big 5-wave swing, in which case this is not wave 5 finished. This is wave 1 of 5, this is wave 2 of 5, and we're doing wave 3 of 5, and then I would really like to see us up here. My first target actually is 155 if we can keep going. But really I have two kind of tricky levels, 121,500 and 135,850, which are kind of tricky levels. If we can't close, particularly on the weekly, above them, they're a little bit of a problem. And if we look at this daily, this is where we got to. So if you think you've done a ABC measured move like this, the most important support level, you put your fib retrace over both swings, and you don't want to get underneath this 236 fib level, which interestingly would be the retest of these highs, and interestingly would put us underneath where all of that money came pouring into those ETFs last week. So one of the things that caused the market a lot of nervousness yesterday and caused this reversal in Bitcoin was a big flood of moves. Whales put money into exchanges, which usually means that there's some profit taking or some selling coming. And these are kind of long dormant Bitcoin whales, and they moved money. I think Look On Chain reported that they moved money to Binance and Bybit. I think 6,000 Bitcoin just after this 123,000 high was hit. And so that caused nervousness and profit taking in the market that we were going to see a bigger pullback. So for me, this is kind of that level, 111,000 then, that I'm kind of going to be bearish underneath, and I'm going to wait for a much bigger pullback then if that happens. And there is the potential that this is a bigger A, B, C. And then I have to say that 100,000 level comes back into play if that happens. So 111,965 or 111, around these highs. Sometimes you can have a look underneath. Short term though, so where's the trend support if we don't come all the way back down there? What if this is a little bit of a pullback and we're going to keep going higher? Well, one of the things, when you have a big thrust week like we had last week, 50% back of this candle, and by that I mean the open close, is usually, if you're going to look for a bullish reversal, let's just mark it so we're just looking for that 50% level, is very often the level. So 114, 167, I'm using an index chart. And remember, when you draw this, it's called a Maribosu when you have a big long thrust candle like this. The 50% is measured from the open close. So short-term trend support really this week should be 114,000. So that's where I would like to see support hold. And we may have to wait for Friday. We may end up just going sideways because we've got options expirations on those ETFs and on CME futures on Friday, and the volume in those has really become quite big. Do these 50% level matter? Yeah, like if we look back, let's look at this candle here. Was lovely, last big lovely thrust candle. This 50% level was a really interesting level to buy. Sometimes they don't even get tested. It works on the downside on the other way. So this is a lovely Maribosu with very little tail at all. If I put that 50% level on there, you can see that 50% level was a really good sell entry for another swing lower, or at least a retest of the lows. And when you look back at these candles, you know that 50% level often really works really well. Here you can see, yes, we kept going higher, but the 50% here was a really good entry for a bounce trade as well. And 50% in this big bull run that we've seen in Bitcoin has been really important. So if we go all the way back to the lows that we made in 2022 and we look at each swing, so if we look at this first swing here, actually that's not very good, 50% back. If we look at this swing here, 50% back was a really good place to look for an entry. And if we look at this swing here, you can see 50% back was a really good place for an entry to keep going higher, as long as we don't close underneath it. And that's always kind of where you want to be looking for your entries, because the closest you are to where you're wrong is always a good place to look for. Least amount to lose if you're wrong. If we look at this swing, 50% back, and if we look, let's move up here to this swing. which is lovely. 5 waves, 50% back. It was a little bit messy, but that 50% level back held. So if we do that thing again and we say, okay, if we lose that 111 level, where's our 50% back going to be? It's going to be this swing lower, 98,800. So just under 100,000. So, you know, we could come, if we look back at previous bull runs in Bitcoin, or if we look at just this bull run that we made from the lows in 2022, each of these swings, if you think about it, 50% pullback was normal, and we kept going higher. Pullback, lovely pullbacks to these weekly moving averages works really well. So, you know, people freaking out today because we've lost 55% since yesterday doesn't necessarily mean that the party is over. But at this point, you know, everybody wants to know, are we in the banana zone and we're going to keep going? Or was this just kind of a blow off top? I will say one thing about one pattern that you don't want to see. So say we said, okay, 110, 112 was our kind of target level. If you overshoot a level in on the downside or the upside, one pattern that you kind of don't want to see, and it's really the overshoot pattern, is a head and shoulders pattern. So here, if this was a left shoulder and we've done a head, what we don't want to see is a bounce from this kind of 98,000 level that makes a lower high, and that for me would be a bearish pattern this year. So for now, though, we're not in trouble at all. This is just a pullback in potentially what is a, we can see we made a pretty scary candle here when it looked like we broke higher, and then we kept going with these ETF inflows. So as long as we don't scare those people and put them underneath their entry price, and we see renewed inflow into the ETFs, which has looked pretty good so far, I think that we're going to be all right. In the broader market, so the tariff uncertainty, everybody wants to know, is the tariffs real this time? Is this another taco trade? Obviously, in the target this week are Mexico and the European Union. The market seemed to get a lot of relief yesterday from the news that Nvidia are going to be allowed to sell microchips to China again. I don't know how long that's going to last, to be honest. China are going to be able to make their own if this keeps going. So, but for now, anyone who tells you they know which way next, be afraid, because this market can turn on a dime. Now this week, right, is options expiration week. Let's talk about the S&P before we go any more with crypto, because I used to think it was 72% when I measured it, but actually it's higher than that. This week normally is bullish for stocks and stock indexes, 7 out of 10 times. Actually, it's closer to 9 out of 10 times. It's a bullish week. But every now and then, it's not a bullish week. And I remember vividly, everybody positioned, and a false breakout here from this sideways range that we're in the S&P would be pretty ugly. And the last time I remember an options expiration week that went horribly wrong, I think it was July 2015. Let's go back to 2015. Yeah, I've been trading a long time. It's true. Let's go to the weekly, and we'll find 2015 in the S&P. July 2015, and yeah, this is it here. This was the options expiration week. Everyone thought it was bullish, and it tended to be bearish, and it ended up being a start of a really nasty summer pullback. And one of those potential head and shoulder. Now, everybody said, I remember at this time here, especially when we retested this in January, everybody said, oh, this is a head and shoulders pattern. So when you draw these head and shoulders patterns, they usually fail if they're just a simple ABC measured movement, which is why it's important to measure the move. Because when we got down here, everybody went, oh heck, this is a head and shoulders pattern and we're going to hell. And actually, this was a really nice equal measured move correction here, and we made a double bottom swing failure pattern, which was a really good buy when all the fear was around. I would not be surprised though. I actually think that the US government want to, there's going to be a big problem with bonds because of all of this big bill and deficits, and I don't think they would be too upset if the market crashed because it would save bonds. So we need to be a little bit careful this week, being too sure that it's going to be bullish. That's all I'm going to say. Okay, let's talk about ETH, because what we have seen is some really nice inflows into ETH. ETH is starting to pick up, and a pretty nice indicator here. This is a weekly chart of ETH against Bitcoin. And these moving averages, this pink moving average is the weekly 20 moving average. And if we look back, you can see that this weekly 20 moving average, the last time that we have not closed above it in more than a year, if we it's been quite a long time, let's put it that way. And we closed above it yesterday. Have we broken out from this sideways range? No. But the thing about these moving averages, when you close above them, you tend to see a little bit of a bigger move. And if we look at the 200-day moving average, you can see here we are testing it, trying to get above it. And we have not been above this 200-day moving average in a year. So a close above this, even if we don't reverse the trend, we usually see a pretty decent spike. So this is pretty interesting. We could see, if we see profit taking in Bitcoin, potentially a bigger move in ETH, and this would point to maybe the start of a pretty decent alt season. For now, we haven't seen alt season where just everything moves. It doesn't matter what you pick, it's going to go up. In fact, some of the bigger altcoins, I like ETH because it's one of the few that's outperforming Bitcoin. Yesterday I told people in my group to take some profit in Ripple, because Ripple has made this ABC equal measured move pattern here, which makes me nervous to a 786. Fib here at 2.95, and whenever you see an equal measured move like this and it starts to look a little bit toppy, we don't want it to turn into a bigger reversal. So far it hasn't. We've gone, we're pretty resilient. We've gone sideways. In fact, when I look at this on this 4 hour, this looks like a pretty nice 3-wave correction, but this is an important zone that we need to get above and keep going if we're going to keep going in Ripple. If we do keep going, 3.6 is the next upside target, but tricky level. And if you've been in this for quite a big ride, this is one of those levels where potentially we could see a bigger pullback, this equal measured move level. So if I take this off and I put my fib retrace levels on, I'm not saying I'm not bullish Ripple, but just that if we see a summer pullback, this is one of those places. So if I put my 786 and 61.8 Fibonacci retrace level, one of the things about these fib patterns, they're a little bit like a ladder. So I would say underneath 2.7, we are at risk of a deeper pullback and potentially a retest of the lows in Ripple. That 2.716 then becomes a level we kind of need to hold above if we're going to keep going on a daily or weekly close. Solana as well is a little bit of a bearish setup here. Double top swing failure at the daily 200 moving average. Again, this is opposite of ETH against Bitcoin. We did the same here, double top swing failure pattern in May, and it led to a pretty nasty correction. Still a correction, but it was pretty nasty. We went from nearly 190 down to 120. So in percentage terms, that's pretty ugly, and that points to potentially this being a bigger corrective pattern here. So back to these lows. So when I'm not sure, let's hide this fib. I wouldn't want to see Solana, if you're going to hang on, I would not want to see a daily or weekly close back underneath 150, 150. This 150, 150 is the 50% all-time highs to lows, and has been a pretty interesting pivot level. So if you're going to hold on for the bigger ride, that becomes really where you don't want to get underneath, because we are likely to then see another swing lower in Solana. So talking about buying strength, let's take a look at some that have been performing really nicely. And Pengu. Okay, I'm gonna draw this from scratch. So if we go all-time highs to all-time lows here in Pengu, these fib levels have worked pretty well. We had a little bit of a pause here at this 38.2 fib, and if we measure, that means for me that my next upside target is going to be this 50%, which is higher. This is 0.369, and if we take that off and we measure our swings, so I'm going to measure from this low to high here, project it from here. Remember, a good sign that this isn't a big wave 3 is, so this equal measured move, we went beyond, it became support. The 61.8 we paused at, 1.618 we paused at. But for me, if this is a big wave 3, then this should be the next upside target, the 2.618 level, and these highs at 0.043. And where are we wrong? Underneath 0.029. So this means lower time frames, keep buying this one. This is literally just broken out from a really nice 3-wave correction. So Pengu, more upside to come. Next upside target, it's not going to go in a straight line, it'll have a pullback. 0.0435 is that's the one I'm looking for next in that one. Pepe has been pretty interesting. Let's take a look. This is a very nice looking kind of bullish flag sideways, and one of the reasons that I have a bigger, higher target in Pepe, if we go back to March of this year, we made a very nice 5-wave swing here. So one like this is either way, was a very nice 3-wave correction. And so I'm measuring this whole first swing, projecting from here. So first upside target in Pepe is 15,144, and this sideways consolidation to me points to bullish flag and a sideways correction. And if we go down and look at it on a 4-hour, this is also very nice 3-wave correction, and that would be the outside target. First move is going to be, you know, kind of, if we look at this a little bit of a channel, that will be the first place. And actually maybe a retest of these highs. Another way to look for our target would be to put a fib high to low here. And if we do this, you can see that this was a 61.8. I don't think we've quite reached this 38.2, but this is our target anyway. Let's put this in. So this would be where we're wrong. Underneath here at 11,365. This 50% pivot level through the middle for me would be my first bullish trigger. So above 12,312. So if we look at this on the hourly, this would be kind of where I want to see it above. First target, retest the highs. Second target up here. Be aware though, in Pepe and all of them, if we are going to see a bigger shakeout in the broader crypto market, this likely won't go. I'm just saying for now, this is a pretty nice bullish pattern to watch. And so if you wanted to, let's put Pepe back, if you wanted the more conservative, then a break of these highs would be it. Just watching to see if this one sets up. Bonk has been outperforming, but I think this one needs a bigger pullback, but it's definitely an outperformer to. Let's talk about Bonk. I am a little bit cautious at this level. And the reason is, if we measure from here, so I'm looking at this, and this from the high in November looks like a lovely big three-wave correction back to these previous swing lows. So everything says to me, get excited. Perhaps this is next swing sees us going to new highs, but I'm wrong if this is just a three-wave correction. So again, you can just do it roughly like this. You can say, okay, this is our first one. Is this an equal measured move? And you can see we're kind of at that tricky level here. 29,000 in bonk, therefore is kind of one of those tricky levels. We don't want to see a big reversal here. If we do, we're not going to be bearish just because it's pulling back, but back underneath 21,900 would mean that this was. So when you measure it, this 61.8 level back underneath it usually points to this being a bigger three-wave correction, or confirms it. And that's also where our weekly 50 moving average is. Now, if we can hold above 28,300, and this is, we literally got here, you know, today. It's not a reversal yet. So far, we've just kind of paused at it. But just watch out that this doesn't turn into a bigger reversal in bonk. Big picture, I really like this. I really like how it's lining up with these moving averages, but sometimes I wouldn't be surprised to see that bigger pullback, and actually think that if this keeps going, that really becomes an important level that we need to hold above. Useless is a big outperformer. So I kept having silly targets in this one, based on fib projections from this first swing, and they kept getting to them. So we retested the highs, went sideways, kept going. The 1.618 found support from it when we got above it. The 2.618, same. Big pullback there, but when we got above it, it was support. This 4.236 fib blasted through it. I had a target here, 0.297. Sometimes, you know, with these levels, the first time you come into them, there'll be resistance, and then you'll wash through them like this. And the sign that you're going up is when you pull back and they are support. And that's kind of what we did at this 0.297 level here. If we have a look, this was our pullback support, and now we're blasting away. And the good thing about this is we know where we're wrong, but I think if we end up seeing a bigger pullback, this 0.297 level should hold. As long as it does, I think it's a great buy against it, and the next upside target is 0.478 basically. So basically 0.3 support, 0.5 next upside target, as long as it holds in useless. So until we get our bigger alt season, until and if, I think one of the bigger triggers for that, you know, is going to be if we have a stock crash and they literally print money to save the markets and bonds, then crypto is going to be quite a good safe haven. Not everything in crypto, but I'm pretty hopeful for the future. It's just we may get a summer shakeout first, and not sure. There's so much uncertainty in the broader world, and it's very easy to say, oh well, tariffs don't matter to crypto and blah blah blah, but you know, broader uncertainty, money does. We need to see money coming in, and so that's what I'm watching for. I don't know what it's going to be in Bitcoin, but I do know that it's pretty important for short-term trend that this 114 level and underneath 111, I think that we are at risk of a bigger pullback in Bitcoin, so be careful.